Welcome to the June 13th, 2022 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. We're going to blitz through the charts today, and these charts are created by McGowan Group Asset Management, a team of 10, the team that cares. And the team has been hard at work with the research, pulling the best charts and graphs from Bloomberg. Super Chuck Norris, Stephen Norris, he is Director of Allocation. Our newest team member, Preston Lane, on the case today, having passed his test. So big congratulations to Preston Lane. We're going to get started with the question. Headlines coming up. Looming recession. And we see those headlines all week long. The inflation report came in, and the inflation report for the month of May, trailing inflation 8.6%, but the month by itself was 1%. This ensures that the Federal Reserve next week is going to raise rates by 0.5% and 0.5% in July and 0.5% in September. That's the current forecast. That would take the cash rates, or the base lending rate, to 2.25%. That is above neutral. That's hostile towards inflation. Gasoline prices, obviously, the biggest component in that. And it begs the question, and the last Fed tightening cycle was 2018, 2019, and the headlines came out, looming recession. This is the reason that you tune to YouTube McGowan Group. And as president of McGowan Group Asset Management, one of the key points is that we're going to explore those headlines, and we're going to update you on exactly the data we're getting. These are the Bloomberg forecasts for economic growth. This says real GDP, okay? This is year over year. There's the contraction of 2020 at 3.5%. Last year was 5.7% growth. This year forecast to decline to about a 2.6% real GDP growth. That is slowing growth, and it will appear anemic. But I have something to show you on the quarterlies. Last quarter, the headline was minus 1.5. Why? Because inflation was 8%. And you subtracted that from an actually expanding economy, but you got to subtract the inflation rate. So you see one negative quarter. You get two negative quarters, which is likely this quarter because inflation is so high. Is that an official recession? It is not a dollar contraction in the economy, but the economy didn't grow as much as inflation. Wow, that's a different type. We'll call it a stealth recession. Well, what happens after that? If we look at the forecasts grow to below 2%. They drop to less than 2% economic growth, and there may be some quarters where it's just essentially flat. So, is that a big contraction in the economy? Well, in the dollar, expansion of the economy still continues, and you can see it in the jobs report and other things. So, not yet. Goldman Sachs said a soft landing this week. That means that you just go to anemic growth instead of what was a robust recovery. Now, let's look at something else. S&P 500, those are the big 500 companies, and that index earns money every quarter. How much money do they earn after tax? Well, we could see the correction in 2020 with the shutdown. The recovery to record profits right here at $50 per quarter per S&P unit. Wow, this is forecasted. It may be overly optimistic, but it's forecasted to go up 20% from here. Even a fraction of that would be what? Not a recession. That's the numbers we're getting so far. There's a profit squeeze. Target got slammed. Other things got slammed. Wow, tech stocks. When growth slows and the multiples were too high, tech stocks measured by the S&P or the NASDAQ 100, well, year-to-date total return minus 26% after Friday's smackdown here ahead of the Fed meeting. So the FANG stocks and the tech dominance of the market is not only over, It's something we talked about last year when the multiples got just ridiculous. So multiple contraction for companies with slowing growth. Still a good company, and there's going to be some great bargains, I think, in that sector December 15th for our growth and innovation allocations. But I'm waiting till December 15th. Now, here the Dow down 12% so far this year. The blue chips holding up obviously a little better. And notice this low, 30,600. Does the Dow break that low and signal another part of a downtrend? That's something that we're watching closely. But there's already some great bargains out there. This category is still a bargain. Energy sector total return year to date is a plus 62%. Institutions trying to catch up on their allocations, but the profits obviously coming in huge for that sector. The other sector where we've had success, medical dividend companies up double digits for the year, despite that the rest of the market is way down. What does that tell us? Well, the research that went into the medical dividend companies, I noticed they were trading at less than 10 times earnings, they had a good yield, and they had great growth rates. That's a great combination. And there are other bargains in the market that we're looking at, high yield being one of them, because you've got some very attractive yields at huge discounts as a result of the assumption that inflation is going to dominate and that we're stuck in irons and it's going to be ugly. Well, that's a lot of times when you get the bargains when there's lots of anxiety. This is the top 10, bottom 10 year to date. We can see Netflix bringing up the bottom down 50, and this is not year to date. This is actually top 10, bottom 10, S&P 500. It's posted at NetWorthRadio.com where the extended broadcast is, and you can always sign up a preliminary client questionnaire, set your time for a meeting with McGowan Group Asset Management to update your plan for the current environment and take advantage of some bargains. Now, Netflix is down 50% almost in 90 days. The year to date is down closer to 80%. That is the dethroning of the FANG tech stock index. Carnival's down, Under Armour's down. The energy companies make up a majority of the top 10 for obvious reasons. That's a shift, of course, from growth to value. But it also says in the fixed income area, we've got the high yield coming up as a great bargain with good forward yields and a discount to what those bonds and loans are actually worth that covers a lot of the risk, but it also provides a capital gain opportunity. So those are the categories we're looking at along with infrastructure, and we've got a great piece from Cohen & Steers, networthradio.com. Just scroll to the bottom and you'll see it. I'm Spencer McGowan, President, McGowan Group Asset Management. Thank you for tuning in today. Be sure to subscribe and share with your friends that want a clear update on where things are going and where the bargains are likely. Thank you for tuning in to NetWorth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, NetWorth Radio, and networthradio.com. The NetWorth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the NetWorth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.